Thanks, Luke, for having me on, man. I'm super happy and pumped to teach these guys how to break down your USD like me.
How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you're new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week, and we break down some of the analysis we have performed to help give you guys a better edge in the market. This is a great series for those who are new to the industry and are wanting to learn more, but it's also good for those veterans that are wanting that edge and are wanting our bias. Now, in today's Sunday Sessions video, I have a very special guest joining me. He is a good friend of mine in the Forex industry, and I feel some of the knowledge he can share with you guys today is going to be paramount to your success moving forward. So what I'm going to do is pass you over to my friend Tanner. He is going to break down the Euro US dollar market, giving you his bias, longer and shorter term. And then he's going to pass it back over to myself, and I'm going to complete my Sunday Sessions segment. If you do go on to enjoy Tanner's analysis in today's Sunday Sessions video, go ahead and check out his YouTube channel, his Discord, and all of the other services that he offers. Tanner is someone that you're probably going to be seeing around a lot more often, as me and him are going to be working closely with each other in the future. What I'll do is I'll make sure to leave all of Tanner's links in the description below, so if you are interested in learning more from Tanner, then go ahead and check it out for yourself. Now, what I'm going to do now is pass you over to him, and he's going to break down the Euro US dollar market.
Thanks, Luke, for having me on, man. I'm super happy and pumped to teach these guys how to break down your USD like me. Um, if you guys don't know, by the way, I trade liquidity inducement theorem. So I like to say it's an advanced version of ICT and an advanced version of supply and demand. Now, if you guys don't know as well, I used to have a background in, well, I still have the background in ICT. I did 2 years of ICT and then decided, you know what, I need more precision and more logic in the charts. So I went ahead and learned what's called liquidity inducement theorem. Now, I'm going to go ahead and dive deeper here and break this down, just a quick breakdown to what makes my style slightly different. I didn't make liquidity inducement theorem, by the way, but what makes liquidity inducement theorem different from ICT is the simple fact that structure and liquidity is prioritized above imbalances and time in a way, or they move in tandem. So on the left here, I would have what we'd call ICT, and on the right, we would have LITS, liquidity inducement theorem. So on ICT, as you know, we focus a lot on imbalances, FVG. FVG, spot the FVG, right? This is the setup, right? You have your turtle soup, your break of structure, imbalance, get an entry within the imbalance, etc. But the problem with that is it's not as precise as it could be. Because as we know, and everybody knows this, liquidity drives the market, not imbalances. Imbalances must be filled, yes, but what makes the price fly up here should be the same reason that makes price fly up here, and that is liquidity, right? So there's this little missing element here, which is the liquidity. And within this, there is an imbalance here, right? There's an imbalance here. In fact, there's an imbalance right here anyways. That is the difference. I hope that makes a little bit of sense. So this is what I focus on, and this is what I teach, and this is what I'm going to do today. So hopefully that made a little bit of sense. So we start on the monthly time frame. It's super important that you make a top-down analysis while diving deeper, because the chart tells a story. It's kind of like imagine you open up a book in the middle, and you're like, who the heck is Luke? Who the heck is Tanner? I don't know these guys. It's kind of the same thing with your chart. If you start in the 30-minute and you don't know anything about the monthly, it's the same thing. So you got to make a top-down analysis and follow price action as it's telling you what it's going to do. Now, I must also preface by saying we cannot see the future. We are merely traders, and we speculate, so we react to what the market presents. So in this case, we build a storyline based off what we see, and then we go based off of that. Simple as that. So as you can see, the setup here, right? We got a turtle soup, break, raid of the inducement, break. So I would go as far as to call this a break of structure, right? Break here, this little area here. I would even go down as far as to say that's the inducement, because it is what caused that pullback. And then target possibly sometime in the next decade up here, right? That would make sense. If not here, we can target this high too. And the reason is relatively simple. I don't want to take too much time, but this did not really cause much of a raid, and especially this did not really cause a raid. So this would be an area to keep an eye out for. But I mean, we're so far away from that. This was in 2018 that I'm not even going to target that now. This is just overall bias. Then we dive deeper. So we go to straight away the weekly. Now the weekly, okay, tells us a little bit about what we need to know. So weekly time frame. We came from down here, so I'm just going to mark this as our strong low. It's our raid. That's the area where you want to keep your eyes on. We can mark this as a raid. Why is it a raid and why is it a strong low? Well, price took liquidity there. Do they need to go back there again? Probably not. Why? Because they already took the liquidity. It's very simple. Simple as that. Where do they need to go next? Where they did not take liquidity, and where's that? We established it's up here. Now, it is granted, there's some liquidity still down here. There's a whole imbalance down here, right? That, as we know, imbalances must be filled. So keep an eye on that. That's an area where you would, if price comes down, depending on how it comes down, look for some sort of entry point within the structure here for a potential buy. But ideally, I want to see price go higher. Then, what do we see here? It's going to make a little bit of a storyline. So we see liquidity inducement here. This is what caused price to come down. So strong highs and weak lows. I'm not going to give you guys too much of the details because I don't want this to, consume your mind. But simple fact, simple rule, is strong highs and strong lows. If you see a raid, the previous low, which caused the raid, will be taken, right? Until there is another raid, right? And then ideally the previous high that caused the raid will be taken. That's a simple explanation. So the raid is a strong low, will support price, right? See how price came up here and was supported, right? It did not do this. It was supporting, right? It kept going. Same thing as what we want to see here. So until maybe there's a raid here, there would be no reason to believe price will just dump without a raid. That makes sense. So liquidity grab, raid, purge, turtle soup, they're the same. So we're going to go ahead and mark that based off of structure, right? So you see how it's telling us a story. We come up, raid, right? No break, no raid. Well, I guess we could say break of structure, right? That's why, actually, let me explain that. Break of structure, and there's a mini raid, right? That's why price is supported, and then comes down to here. Raid, right? This is the low that caused the raid. This is the high that caused this raid. Break, supported, because it's a strong low. Raid. Making sense? So it's really cool. You can dive deep into this, like the inception, but ideally, just keep things simple. Very, very, very simple. We are reacting off of this low. I want to clean this up a little bit. My bad, guys. There we go. Now we're targeting this high. Now the week has just closed, so now we have a general bias on this weekly. There's not too much we can see, so we're going to dive deeper on the daily. So now we're like, okay, cool. Price came here. I kind of just drew this roughly here. We have our liquidity inducement there, causing a raid of that low, right? So price will tell us a little more. This is the high that caused the low to be a raid, right? So came back up. Oh, there we go. It's a break of structure. That's why it's a break. It's not a raid. That is why this low held price. Raid equals strong low, right? Broke structure. Boom. I'm going to draw this again. That's a little inducement there. I don't want to get too much into the details again. Don't want to confuse you guys. Another raid. Then a break. How do I know it's a break and not a raid? Because that's the high that it's like order flow basically. It's like a stairs in simple matter. Strong low. Simple. Don't complicate it. Break of structure. Boom. That's why, again, low was not taken. It supported. And where was the liquidity? It was on that low right there. Why is it that low? We're going to dive slightly deeper. Let's go to 8 hour. You can see there is nothing there supporting all this. It all comes right back down to this area. And actually, it's a nice area. I'm convinced price will come back down here eventually. But let's just keep it very simple again. Raid. Break. Right? How do I know it's a break? Because price did not do, not too long. We're good. Price did not do this. It did this, right? So now we have to ask ourselves the following question. Where could we see price come? So I'm going to mark this as a potential area where price could come down and do that, right? Why? Because this is a small raid, but it's also so close to all the structure, it could be an inducement. So if you're going to look for a buy, you can mark this POI here. I'm going to mark it here. Doesn't mean it's going to come here, but it's an area to keep an eye out for. And then we're going to dive deeper into this area. So actually, let me go on to H1. See how we're going from top down all the way, and it's all making sense now? That's an area to keep an eye out for. That's an area to keep an eye out for. Why? Because liquidity will drive the market. That's an area to keep an eye out for. So now, what I'm expecting here, and I would love to see this, price inch its way up, do something like that, and do something like that, right? It would make sense. If we zoom back out, hopefully that's not too ugly. Yeah, let's go 2 hour. There you go. It would make sense, right? Overall, just like there, the little ladder, the staircase system. Boom, 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 right? It all makes sense. That is what I would love to see. Now, let me just dive up to the 15-minute and show you guys why I chose that. Because that is an Asia low that was not taken. So that's an area where price should come down. That's a high that took a long bit of liquidity. This is a obviously pool of liquidity. And this, right? Look at that. Relative equal lows. So that's possible that this is also a pool of liquidity, which I would love to keep my eyes on. So that is my analysis for Euro USD. Now, obviously, we want to react to all of this in a smart way, right? If price gives you the setup up here, that's when you take it. But it has to be above the liquidity, not below the liquidity, above. And that's it, guys. That is it. I hope you guys found this insightful. I love doing this. I do this for free. I do this every day. So if you guys, want to see more of this, comment below. Tell Luke, hey, yo, I want him back on here. And yeah, man, we'll make it happen. So thanks, Luke. I'll pass it back to you from here on out. And we'll, take it by storm.
Okay, so I hope you enjoyed Tanner's analysis there. Brilliant insights into the euro US dollar. I couldn't agree more with the analysis he's provided, and my bias is very much the same as his. Now, what I'm going to do is go through some of the pairs that I am looking at tackling this coming week. We've got the Great British Pound to the US dollar, so the cable. We have XAU to USD, so the goals to the US dollar. And I might go through the US dollar to the Japanese yen as well, depending on how long this video is going to be. Now, as I mentioned at the start of the video, if you did enjoy Tanner's content, go ahead and check him out and support some of the work that he's doing. He does live streams every single day on his Discord. And if you have enjoyed this video, don't forget to leave it a thumbs up. As always, the support you guys provide on a day-to-day basis is very much appreciated. Now, without further ado, let's jump straight into my Sunday session segment. Okay, so the first pair I'm going to touch base on today is the Great British Pound to the US dollar. You can see here that I am literally in prep to go short in this market. And the reason being is because if we just head to the daily time frames, let's just show you this real quick. You can see here that this market has been providing us with clear bearish structure, giving us lower highs and lower lows in the market. Now, as of recent, so going back to September of 2022, you can see that price has been within a corrective phase, putting in that bullish structure, and you can see that. So price has been correcting itself after the last impulse. And what we are starting to see now is price actually break down in prep for that next impulsive wave to trade us lower. What I've done is I've gone ahead and zoomed in, found areas of interest, areas of supply that price was to trade up and into before trading us lower. We had clear rejection here from an area of supply that I marked out back in July of 2023. Price went on to break structure to the downside, breaking the last protected low within the bullish correction. This confirms to us that the bullish correction trading us up has now finished, and the new impulsive wave trading us lower is ready to take place. Now, what we've seen here is the initial corrective wave that followed after the break of structure, and this is just so price can set that lower high. Okay, so as we zoom in, I just want to show you something here. This wick to the downside followed by a wick to the upside. If I just zoom in, this represents buy orders. Okay, and this is right above a load of inefficient structure in a bearish leg. So this is actually an area of interest for me, as this is classed as a hidden order block. So underneath this is buy orders that need to be mitigated in order for price to trade us lower. Now, as we go across, you can see here how price has traded perfectly into this area of interest and has rejected nicely to the downside. So we had a move to the downside. If we just head to the 4-hour time frames, you can see here that we have started to break some of these lows that were set in the market. We had a break of structure here after price traded into this area of supply. So that tells me that the supply and demand balance has flipped and there is more supply in the market than there is demand. So that is giving me the suggestion that price is now ready to continue with this higher time frame impulsive wave to the downside. So what do we do when we see a break of structure? Well, it's important that we look for areas of interest for price to trade back up and into, in terms of a reversal to the downside, trade back up and into to set that lower high, right? Just as we did with this one here, we are now doing the same thing, but going down on time frames. So we look at the impulsive wave that broke the structure. We find an area of interest. This here represents a fair value gap, something that Tanner touched base on his segment of the Sunday Sessions video. And what we want to see now is for price to trade up and into this. I want to see clear rejection from this area, another fractal break of structure to the downside, breaking the last protected low set within this bullish correction, and from there that's when we can look to get introduced into this market. So to add more depth to this analysis, if I just get rid of this path tool here, what we want to see is for price to trade up like so into this area, for demand to be offloaded, so buy orders that have been introduced from these lows to be removed from the market because people are closing those buy positions, and for supply to be introduced. So we're offloading demand and we're loading up on supply. That is going to instigate a complete flip and reversal in the current trend. So we then want to see that break of structure being this here, followed by a new bearish leg trading us lower. Now, a break of structure is going to be a break in the last protected low, as in bullish structure, we protect the lows and we break the highs. So if we are breaking the lows and protecting the highs, that is giving us signs or clear instructions that we are now following the laws of bearishness. So we want to see this take place in and around this area of supply. Once this happens, we want to see price pull back to set a new lower high, just as we have done here, just as we would do here, and then just as we have done on the higher time frames here. So we want to see that 3 times. This would be the 3rd time, and this is where we'd be looking to get introduced. Looking for 3 breaks of structure, followed by 3 penetrations of areas of interest, whether it's supply or demand, gives us enough confluence to confirm that the markets are trading in the direction we desire. So that's what I look for. So this would be our 3rd and final break of structure and penetration of a supply zone. I would be then looking to go short in this market, trading price lower. My stop loss will be set above the zone that I get involved from, and my take profit is to be set just above the last higher time frame predicted low. Why? Because that confirms that and guarantees that our take profit is achievable, because we have the bias that this market is going to be trading as lower longer term. So realistically, these protected lows should actually break to go on to create new lower lows. So that's my analysis for the Great British Pound to the US dollar. Definitely looking to go short this week. I want to see weakness in the Great British Pound, strength in the US dollar. I mean, we've had some crazy news as of recent, which has depreciated the US dollar. I now want to see that correct itself and for bearishness to be introduced into this market. So if you guys haven't done already, go ahead and mark out this zone for yourself. Wait for the right confluence and confirmation in order to enter, and then get yourself involved. Moving over to the XAU US dollar market, you can see here that this market has been trading us in a bullish way, has been since the beginning of time. It's a precious metal. It's constantly appreciating. Yes, we have pullbacks, but the value of gold is always going to be there, with it being a precious metal and with the currencies once being backed on gold. Now, my thoughts for this market, considering we have just broken the $2,500 mark, which is an all-time new high. It's a new record price for gold. I do want to see price come back down to correct itself initially before we see a continuation in this growth in value. So what I've gone ahead and done is mark out a clear fair value gap on the 4-hour time frames for this market. I want to see price come down to correct itself, pick up more demand in order to push price higher. So I've not got any crazy breakdown or analysis for this market. This is a bullish market. It's been putting in clear bullish structure for a very, very long time. We just need to find an area to buy in. So we bought in here back the end of July, and we bought in here as well mid-July. I want to buy in again here and hold for a longer period of time. I think if we come down to set a new higher low, this here should stay protected. We should be safe to hold on to the buy orders that we've placed. But ultimately, I am looking to take this market to the upside, and I want to see a continuation in this bullish structure. So again, if you guys haven't done already, go ahead and mark out this area. It's not too large of an area. We're looking at about a 90 pip zone. Simply wait for price to trade in, give us that rejection and fractal break of structure before we look to take part in the market. But that's my analysis for XAU USD. Very quick and brief, I know. Not much to be said. A bullish market, we look for buy positions. There is no signs of bearishness longer term, so we must look to buy into this market with a longer term bias. Okay, I'm going to finish off on the US dollar Japanese yen. We've had a break of structure to the downside back end of July, which suggests that price may be looking to go short longer term. This is another market that has been extremely bullish for a very long time, putting in a lot of bullish structure over the years, because the US dollar is superior to the Japanese yen. But what we've seen as of recent, especially with recent fundamentals and what's going on with the economy and the news that's being put out, we've seen real weakness in the US dollar. Now, as I mentioned when we were going through the Great British Pound to the US dollar, I want to start seeing some strength being introduced. So if we just head back to the 4 hours, you can see here how I have 2 areas of demand. I want to see price trade into one of 2, and then I want to see price actually reject and trade us higher before we have a continuation in bearishness. So there's 2 areas of interest. This one here represents a hidden order block, and so does this one here. They're both areas of demand that are considered hidden order blocks. So as we go down to the lower time frames, what we would unveil is actual sell orders that need to be cleared and closed before we can see a continuation to the upside. So I want to see price trade down into 1 or 2. So go ahead and mark out these zones as well on the 4 hour time frames. I want to see price trade us down into 1 or 2, clear rejection to the upside, breaks of structure, confirmation parameters to be met. We can look to buy into this market. Now those buy positions will be short-lived. I want to see price trade up and into 1 of 2 areas of supply, whether it absorbs the first one and trades into the second, or whether we get clear rejection from them first. I want to see confirmation parameters to suggest a new bearish leg to the downside, and that's when we'll be looking to take part in the next higher time frame impulsive wave to the downside. Because if we just go back here, zoom out ever so slightly, by price trading up like this, followed by a new bearish leg, we have clear bearishness on the higher time frames. I say this all of the time, and it's very important that when you guys are doing a top-down analysis, your higher time frame analysis correlates with your lower time frame analysis. So this analysis here, yes, we're getting quite fractal and we're looking at the lower time frames, the 1 and 4 hours, for areas of demand for price to trade up and into this. It's good because we are adding layers to our analysis. We are creating a story and a path with how we feel price is going to play out, but it always correlates with the overall picture of the market. And it's very important that you do that. If there are missing pieces in your story and the journey that price is going to take, then more than likely your analysis isn't going to play out. So when you are completing your top-down analysis, it is very important that as you're going down on your analysis in timeframes, that everything matches with one another. So that's my analysis for the US dollar to the Japanese yen. That's what I want to see take place over the course of the next week or so, probably 2 or 3 weeks. But those are my thoughts for this market, the US dollar to the Japanese yen. Now, I do actually have some exclusive analysis for the NASDAQ and the Bitcoin to the US dollar. So if you want to see that, go ahead and join the Learning Lounge group chat. It's completely free. It's just a free Telegram group chat. The link will be in the description. I'll post my analysis on there for you all to see. I posted some Bitcoin analysis maybe 3-4 months ago. It has played out perfectly. So those who shorted and are now looking to go long, they would have profited twice, both ways. And then same with the NASDAQ. I put some analysis out a few weeks ago, and that has played out exactly as we previously predicted. But that is actually going to summarize this Sunday sessions video. My analysis has been quite brief and quite quick. I wanted to allow enough time for Tanner to show you his Euro US dollar analysis. I didn't want the video to be too long, so hopefully this is the perfect length video for you guys to keep you retained before you go off and do your own analysis in the Forex markets this weekend. But if you guys have any questions or queries with regards to the analysis that either me or Tanner have gone through today, please leave them in the comments below and I'll be sure to get those answered. And as I said at the start of the video, if you have enjoyed Tanner's analysis, go ahead and check out his services. He's a great guy, someone that I have vetted as a veteran in this industry, and he is someone that is going to be making an appearance more often than not on the YouTube channel. Now, I just want to say a massive thank you for watching, and I'll catch you all in the next Sunday Sessions video.